another edition of Talk Stocks. This episode is sponsored by IR Labs, a full-service investor relations firm driving investor engagement through creativity, purpose, and honest communication. For more information, please visit their website. IR Labs is not associated with Vested One Media, and neither paid nor received compensation for this episode. Today, we are speaking with Bill Besenhofer, co-founder and CEO of The Fresh Factory, a vertically integrated CPG company that develops, manufactures, and sells a wide range of products made from fresh produce. It operates a manufacturing facility near Chicago, serving customers across the United States. The company recently uplisted to the TSX Venture Exchange and trades under the ticker FRSH. It has approximately 52 million shares outstanding, a market cap of $47 million, and an estimated revenue run rate of just under $25 million. Make sure to read our disclaimer, as this is not investment advice. And if you like our content and don't want to miss our interviews and updates, please subscribe to our channel and hit that notification bell. So without further ado, let's jump in.
Hi there, and welcome to another edition of Talk Stocks. I'm your host, Keir Reynolds, and today we're lucky enough to have Bill Besenhofer, co-founder and CEO for The Fresh Factory. Hey, Bill, how you doing?
What's happening? Thanks for having me today. Really excited to be with you.
Hey, you're very welcome. We're excited to dig into what you're doing. For some of those that know me, I love CPG, involved with a CPG candy brand, and I have immersed myself in it in the last sort of 3 or 4 years. So when I saw and read through what you guys are up to a few months back through IR Labs, I was like, wow, we really got to have Bill and Fresh Factory on here. So thanks for squeezing me in. Maybe just to get started, for those of my audience that don't know you, maybe you could talk a bit about your background, how you got into the industry, and how Fresh Factory came to be.
Sure, absolutely. So I started off my career back in the day as a Lean Six Sigma black belt for a Fortune 10 company in the pharmaceutical and medical supply space. Spent 5 years there. Was lucky enough to be able to be on some pretty high-level projects, kind of in the background, but learning while having somewhat of a seat at the side table to learn from executives that had many years of experience, and had done that for about 5 years. Was lucky enough to actually, my co-founder in the Fresh Factory and a few other friends had started a proprietary trading business back in the early 2000s, where they were building electronic trading platforms, quite frankly. And after about 5 years of being in corporate America, I had decided that it was maybe not the best thing for me, and I wanted to move on into more an entrepreneurial category and space. And so Nate, my co-founder, him and as well as a few others had started a business, and they'd started to grow at a rapid pace. And so I had some experience with growth as well as building out processes, procedures, et cetera. And so moved into the financial space for roughly 7-8 years, helping manage 5 asset classes, over 100 different traders. And we had done that for quite some time. And after that, then we had moved away from the finance industry into small family office and into investments. And one of the things that we had done back in about 2015 was help start and find a venture fund based out of San Francisco called Great Point Ventures. And in doing that, we had started to see, obviously, a lot of different things that were out in the industry, and some specifically within the food space. And I think, one of the things that we saw in the food space was that there was this opportunity for, well, back then, plant-based, but really clean label, better for you products. And one of the things we noticed is that there weren't really anybody out there that was producing it, manufacturing it. There were fantastic ideas. Brands are growing at just rapid rates. People could get and create a brand faster than they ever have, ever. However, with the infrastructure that was in place, it's really, really difficult to do that when you have to take, 6 to 12 months to get something launched. Honestly, a lot of the food and stuff that was out there and the facilities that were built, it was for additives and preservatives and things of that nature that, quite frankly, isn't really what people were looking for and are looking for. I've got 2 small kids, as I know you do as well. And, my children, a 5th grader and 8th grader, they look at the backs of labels. I mean, I could tell you right now, there's no chance that when I was their age, that I was even paying attention to any label, right? And
Yeah.
whatever they told me, I believed in, and we did it. Different world. It's a different time, different age. And so what we noticed is you've got younger people in America and across the world, quite frankly, who are more in tune with what they're putting in their bodies. And they want that better for you, clean label product. And so when we noticed that, oh gosh, there's this opportunity, one of the things we had decided after the first tranche of our money had gone in, we decided, we wanted to go back and create a company. And we went ahead and did that. And that's basically how we ended up starting the Fresh Factory.
Hey, excellent. Yeah, yeah. Times really have changed. I know when I was a little younger, going to school, we used to, parents used to send us to school with cans of pop. My gosh, I think they might take your kids away if you did that in this generation. So,
Exactly.
you're very correct on the clean label and how definitely our food consumption has definitely evolved. So was it really kind of your children that kind of inspired you to start the Fresh Factory? What was sort of the inspiration and where you guys
Yeah.
all said, yeah, we're going to go do this?
I got to give credit to my co-founder. One of the things that he's done a lot of times within multiple industries is finding niches and things that are ahead of its time. We've been lucky enough to be a part of some other businesses that are well ahead of where things are at, but are there at the forefront and to really start some things. This was just yet another one of those that as we start to see this, we felt like, man, this is a really true opportunity to untap the healthy, fresh, clean, world, so to speak. Because again, at the same time, if you recall, Food Safety Modernization Act had come out, and so food safety became a really important piece. Unfortunately, with what happened to Chipotle back then, and there's tons of issues and things. Well, in seeing that, and then kind of looking at again a bunch of different opportunities, really it was just more of we really felt, because we believe it ourselves, that if there could be somebody out there who could build a vertically integrated platform that could be flexible and dynamic and could launch products and or brands at a rapid pace, they would find themselves in a very, very, very great position, because not only are they helping those brands that are growing on an everyday basis, but we're also kind of spreading the word of, we're looking for better for you food for everybody in the world.
Yeah, excellent. Well, I can tell you from our own path, having to go out and identify contract manufacturers to make a fairly simple sort of candy product. My gosh, it's probably one of the longest, most difficult parts of the whole process for brands,
Yes.
and so certainly amazing if and nobody wants to move quickly. They all want to take forever. And as a young company that's got a bit of a burn rate with a team, you gotta move quickly. So sounds like a great niche to sort of be involved with. In terms of like plant-based, I guess from an investment class, the last little while, it's almost been like a four-letter word. It's not really been where people have wanted to be.
Sure.
It's not been like buzzy, especially for sort of small cap land. Where as you're listed on a junior exchange, it's not really been where a lot of investors have been deploying capital. Been a little
For
harder.
sure.
What do you sort of say about that in terms of the segment? Would you say that everybody's just having to work more towards generating good, strong fundamentals?
Yeah, it's interesting. It's definitely taken a hit, and it's funny enough. In the venture fund that we had started, one of our initial investments was Beyond Meat, and so clearly early on, that was a really great investment. But for us as the Fresh Factory, I think that's one of the things that maybe sometimes while we do a lot of plant-based, really it's all about clean label.
Right.
So plant-based is absolutely something that we aspire to and can help with, but really it's about clean label using fresh ingredients. So, for us, we've actually been okay, as it relates to business, especially from a sales perspective, especially from a lead perspective.
Right.
It's not stopped, and it's growing at a rapid pace because, again, one of the things, while we do work with a lot of these smaller brands, the reality is that we do have some very, very large publicly traded companies who have the same thesis, same mindset as us, and they need somebody to go to be able to flip value-added products to their consumers and customers on a very rapid basis. So it's not just, actually funny enough, small players that are looking for it. It's large companies that are trying to do the same thing because they want to
Right.
get healthy product out to the marketplace as soon as possible. And because of what we've built and the flexibility, we really allow them to be able to kind of get something in market. And if it doesn't work, can kind of pivot pretty quickly on a dime with the food scientists that we have and on staff to really be able to get some things out there. So yeah, it's unfortunate, obviously in the plant-based sector has gotten hit. I mean, look, really hard. It's absolutely gotten hit hard. But for us, again, it's really more about being clean and understanding what we're putting in our body, and using fresh ingredients.
And I guess the two would be kind of disconnected. You've got like the investability and what investors are sort of seeing and how stocks might be performing. And then
Yeah.
you've got like the actual operating like business, the actual, customer that's looking to like read label and see clean label.
Yep.
So I would say, would you say that, from an industry perspective, this is still sort of like a massively growing segment,
I do.
and that there's probably a bit of a disconnect from the investment side for the
I
time
do.
being?
I do. I do. I mean, I don't think plant-based is going away. I really don't. I think it's going to be there for the long haul, because again, it does get after sustainability. I'd be lying if I didn't say hurt it. I mean, because that's honestly the true reality behind it, a bit, at least from our perspective, from where we were at, and some of the plant-based customers that we had. Because unfortunately, when you do some of these things, when you do clean and you do plant-based, it's expensive. It isn't cheap. And so one of the things that happen is when it occurs, and obviously price and things go up, consumers tighten the belt a little bit, and they need to make sure that they're able to, spend and be able to afford some of the things that are out there.
Excellent. Maybe we could just get a bit more back to sort of like your business model, and so the
Sure.
Fresh Factory. You've got sort of like a production facility that maybe you could explain some of the product categories that that you guys can produce, and then you use this term vertically integrated. Maybe you could walk people through what that means for
Sure.
you.
Absolutely. Absolutely. So we've got about 50,000 square feet of production space right outside Chicago, Illinois, in the United States, and with multiple other locations because we're outgrowing our space as it is, but other space to put our packaging in, et cetera. But we've built a vertically integrated platform. Okay, what does actually that mean? It's not just a buzzword, but really from us, to do from farm to shelf, it really starts with innovation. And, I had mentioned it a little bit before, we have some fantastic food scientists who've studied, their entire careers as it relates to cleaning up food and taking additive preservatives, things of that nature out of it and maintaining that and allowing us the ability to extend shelf life, and utilizing that through technology, something in one aspect called high pressure processing, HPP. It's a technology that we've used for some of our products, not all the products, but for some of our products to extend shelf life as well as to create that freshness even 90 days after, or 120 days after. But it starts with our innovation. And, from there, it goes to supply chain, where we've developed relationships throughout the industry for farmers, direct relationship with them to be able to get the product necessary, as well as then moving into manufacturing, I think. And that's one of the things that, differentiates us, quite frankly, from pretty much anyone out there, is the diversification that we have within the manufacturing space. So within manufacturing, we've got 6 different lines. So that's everything from, we do cold pressed juices from a 8 ounce to a 16 ounce to a 32 ounce, all the way to 2 ounce shots, which we have a separate line for that. So we're able to do 2 ounce shots. And again, if there's anything that's going on right now that's really hot, it's wellness shots. So your ginger shot, your turmeric shots, those are really hot. That's something that we've invested in and really started to grow quite a bit. From there, then we've got a pouching line for food service. And then we've got where we can do all sorts of things from hummuses and sauces and things of that nature to a bottling line that we can do salad dressings, vegan mayos, soups. There's so many different things we can do on that line. And then we also have a rotary line. that we can do anything from a 2-ounce cup where you put a little bit of salad dressing in it that, gets sent off, puts in with lettuces and etc. Goes into a salad kit, all the way up to 32-ounce tubs of hummus and dips and sauces of that nature, even on from a rotary perspective. And then lastly, we've got yet another line, which is what we call a bar line, our fresh bar line, where we're producing healthy refrigerated fresh bars for a multiple of customers. So we have that manufacturing flexibility. So that's a big piece. From that, then we go to fulfillment, and we are able to pick, pack, ship. A lot of times we're shipping across the United States, right? We're going to the West Coast and going to the East Coast. There are things that we're able to provide for our customers where we can aggregate shipments together, which will decrease the cost of the shipping, which, as you can imagine, a couple of years ago, shipping costs were out of control, but that really helped our customers because we were able to kind of merge and put those on the same truck and take them all across the United States, all the way to financing. That, again, we go into the financing aspect. There's things that we can do, and I think you mentioned it, a bit, that, there's some things that we take from our VC background where we look and analyze some of the customers that are being brought to us. And in some cases, we may partner with them, and we might be able to do some things where we can give them better terms, et cetera, and or even, equity opportunity for us. And so from that, it goes all the way into sales and marketing, where we've got some people that we have on staff that have expertise in that can help with that if it's needed. So, when I say vertically integrated, I'm saying we really truly can provide a lot of this for, again, whether it be small brands that really need it, all the way through to publicly traded companies who are not new to the space, but are growing at their own rapid pace, that need that backbone to help them get, to hit their goals.
Do you guys do any DSD, direct store distribution for any of
We
your
don't.
brands?
Well, let me take that back. So there are some things. So we do own a few brands ourselves. That are, some of them are plant-based, and we do deliver, locally through DSD through the Chicagoland area. But some of our brands are national, so they're going to national distribution centers, and obviously from there they're going out to stores.
So I'd imagine you've kind of partnered with a couple of large distributors that we might know.
Yeah. Unify and Kehi are some of the large ones. Chef's Warehouse. There are quite a few because obviously we've got multiple different customers, and a lot of customers, they have working relationships. Cisco, they're very big. So we deal with quite a few, but then we also have, some local vendors that we work with and distributors.
Hey, sounds like quite the vertical integration there, right from farm to literally table. So and everything in between. So that's great. Thanks for covering that. You kind of touched on it a little bit in terms of what sort of brands are you looking to work with? Is there a certain size, certain amount of volume of products that you're looking to move, or do you work with startups? Take us through some of your process for how you select who you're going to work with.
Yeah, I think as we've started to grow as a company, and I know we'll probably talk some financials a little bit here and there. Strategically, we've had to make some decisions as it relates to the types of customers that we bring in. And I think one of the things that we've done a really, really good job at is looking at what fits within the framework of what we've built from our manufacturing perspective, as well as what we've invested in. We've invested in some more capacity. We've invested in more equipment. And with doing that, clearly we need to go find we find larger customers. Now, that doesn't mean we're not going to work or we don't work with startups, because we do. And, I think for us, the process for us is, let's start from the one end. If we work with a startup or a new company, there's a couple bullet points that we're going to look through. Are they, what is the story? What is the product? Is it something we believe in? Is it something we think can be good? Is the entrepreneur, again, it brings back our VC hats, and we kind of look at it from a VC perspective of, is this something that our team will put time and energy and effort into? And do we feel like it's on trend, or it's in the right place, or it's the right product? If that's the case, then it goes to another step, and then we kind of go and make decisions from there. As we move into the larger customers, really what we're looking at, and again, this is what's so great about what we have, even if you're an investor, we've got diversification. and we are diversified across multiple sales channels. So you go from food service to direct to consumer, which is a very big hit, obviously from COVID, and that's exponentially skyrocketed. Then you've got your retail, and then you've got quick service restaurants. So we've diversified ourselves into multiple sales channels, which really allow us to kind of build relationships within each of those. And then as we look at it, we're looking for customers that have the same thesis as us, as trying to be clean as they possibly can be, as well as looking for, as they're starting to grow, us to help them grow and grow with them. And so really to try to partner with some of those other players so that we can grow with them and help with new value added products that they're looking to add to their portfolios.
Are you guys at production capacity, or can you take on more business?
No, we're not even close. And I say that because one of the things is, within manufacturing in general, like from my perspective, right, look, we can get more machines, which we did. Like, we upgraded our kettles. We've upgraded our lines to be faster. And so because of that, we've increased our capacity. So yeah, we've got plenty of capacity, right now, for sure. But, obviously as we continue to grow, space will become a constraint. And it's not the production side of it. It has to do with, where do you store things before you put them into production? So that definitely is something that's on our radar, and some of the things that we're looking at as we move forward here into Q4 into early next year.
Are you working like on a single shift, or are you sort of doing double shift at this point?
You know what? One line depends on the line. It depends on, obviously, the orders that come through, so to speak. But at one point we were on a second shift on one of the lines, but as things go cyclical, we scale back on that and upgraded some equipment. Next thing, now there's no need for a second shift for it. So right now we're still really on one shift all across all 6 lines.
So it sounds like definitely some potential upside or increased production by adding a second shift for some of the lines. That's
100%.
Great. You touched on it a little bit in terms of offering service for equity for some of the brands that you work with and contract manufacture. Could some of those turn into like outright acquisitions down the line, or maybe the potential for new public listings so you can monetize that?
Yeah, 100%. That's exactly the case. And I think that's part of the strategy, that we had going in with this opportunity. Now, to be honest, it's been a lot slower since, and we've been a lot more diligent with the types of companies that we would potentially look to do this with, just because it isn't an easy marketplace right now. It's not for a small brand getting into the marketplace right now. It's gotten to be a little bit more difficult. So we've had to be very, very, very diligent on the types of opportunities that we would look to do any sort of equity in, just because we know how difficult it can be at the moment to get into stores or into places at the moment.
Manufacture. Could some of those turn into like outright acquisitions down the line, or maybe the potential for new public listings so you can monetize that?
Yeah, 100%. That's exactly the case. And I think that's part of the strategy, that we had going in with this opportunity. Now, to be honest, it's been a lot slower since, and we've been a lot more diligent with the types of companies that we would potentially look to do this with, just because it isn't an easy marketplace right now. It's not for a small brand getting into the marketplace right now. It's gotten to be a little bit more difficult. So we've had to be very, very, very diligent on the types of opportunities that we would look to do any sort of equity in, just because we know how difficult it can be at the moment to get into stores or into places at the moment.
And so the facility is based just outside of Chicago, is that correct?
Yep, that's correct. Yep.
And your sort of are you servicing kind of the East Coast or national?
Yeah, so we basically service. Yeah, so we service everybody all across the United States. I mean, pretty much within like a 2-day span, we can reach, 75% of the United States. The tipping points, right? You get way into Washington, or you get down to even Miami. That takes a little bit of time, but for the most part, we're pretty much able to touch everywhere, which is, I think, partially why, we really believe in like a centrally located location. We'd love to be able to expand as we continue to grow capacity, but then obviously from there, you could spoke it out to the rest of the United States and get there within, again, 2 days.
Excellent. And in terms of some of the, have you been approached, or are you doing any sort of like private label? I know, that's sort of become a big thing in our Canadian sort of grocery market. A
Yeah.
lot of the big retailers really now want to have private label and have their own brands,
Yeah.
so that they can get even more margin. Is
Yep.
that something that you're sort of seeing, and are you able to participate in that?
Yeah, that's a great question. So, private label for us, even when we started, 8 years ago or whatnot, private label was big. I mean, that's where people were going, the Targets of the world. I mean, exactly what you said. People wanted to have more margins. So 100%. We see it. We bid on things often as it relates to that. In some cases, people are coming to us because we've created products that have not even been in the industry yet, that they found out, oh my gosh, these guys have it. They have come to us. We've launched some things. There's some stuff out there right now, in some subsets that, are better for you products that, are household names throughout, the US at least. And so, but yeah, private label is it's big. I mean, I think you can see that as you look at, the earnings of other companies and whatnot, and especially the large ones, that when they come out and say their focus is in private label, that's obviously a place that, we've played in and continue to, and we'll look to do that moving forward too.
Yeah, I know years ago, private label stuff used to be awful quality, and you were getting, it wasn't anything like the real brand, but they've obviously done a much better job going right to some of the manufacturers that
Yep.
manufacture the actual brands. So, anyways, that's a good segment to be in. Means you've got great customers, big customers that are able to pay their bills. Working with them.
Exactly.
And maybe you could touch a little bit on like sustainability. I know, from a clean label, plant-based, now a lot of these, again, when you're looking at things like a fresh bar, which,
Mm-hmm.
These are single serve, they're moving into more sustainable
Yep.
type packaging, like compostable and
Yep.
things like that.
Yep.
How do you bring sustainability into your overall business?
Yeah. So, I mean, it's funny because, we've done some things even from a facility perspective. So whether it be LED lights, or we've got, solar, so that we can use solar for energy, for our building. But I think there's some things that we're working on right now that, quite frankly, I think would obviously put us at the forefront of sustainability. And I think, that as it relates to like, existing emissions and doing some, carbon neutral, products, so to speak, for our customers. And so, I'll be honest with you, it's a huge opportunity. It's definitely something we talk about quite a bit. Not all of it is the easiest of things, and I think some of it is really, and again, and you see this across everyone. It's just kind of defining and measuring exactly what we're looking for. Sustainability is quite a bit of a buzzword, quite frankly, it seems like, but we don't want that to be a buzzword. It's no different than what we talked about from plant-based or fresh, and clean. We want to actually, talk the talk, so to speak. So, we see some huge opportunity, to kind of be a first mover in some of these things as it relates to like being a carbon neutral manufacturing, platform for brands to come to. So, that's what I've got for now. I can't share too much more from that, but, let's put it this way, we're in the lab putting things together to put ourselves in a position to really help push the sustainability movement.
Great. Why don't we move over to, we'll ask some questions on kind of financial performance here.
Sure.
Cover some of the some things that investors always ask. So it looks like you're on about a $30 million sort of Canadian kind of annualized sort of run rate based upon your last sort of Q2 2023 financials.
Yep.
Showed quarterly build revenue of about $7.5 million, which on a year-over-year basis saw a 42% sort of increase.
Yep.
What sort of steps are you continuing to take to sort of see that sort of clip of growth? Is that something investors can expect, or is that sort of a one-time thing and it's going to level off?
Yeah, we've been lucky enough for the last few years to have some really substantial revenue growth. And that's obviously been a huge focus for us is revenue growth. Obviously on top of that though, it's EBITDA positive. It's really the bottom line growth that becomes really, really important. So, for us, just to continue, I can envision us continuing at a pretty good clip. I'm not sure that it'll be 50% year over year with profitability, but it's darn near close with profitability, which makes everybody happy. And so, some of the things like right now, short term, really the focus is just executing on the opportunities that we have at hand. We've got a really, really strong pipeline. Like I think I'd mentioned before, fantastic R&D team and process that we have in place with, an operations team that we've got a lot of trust in. And quite honestly, we've pretty much, aligned everybody and streamlined a lot of the work throughout the team. And so for us, short term, really just executing on the opportunities at hand. Long term, we're just looking to continue to grow with and collaborate with some of these, leading brands and companies that are out there in the healthy, clean space. Continuing to help support them and help them in what they're doing, as well as, taking care of the things that we need to do internally.
You kind of touched on it about profitability. It's kind of a key thing, especially when a sector is not seeing as much interest from brokers and bankers to sort of fund at the same clip that they were before.
Yep.
When the faucet for more money for growth, top line growth, sort of turns off a bit, people tend to turn to improving fundamentals and get into profitability. What are some of the operational sort of efficiencies or things that you're doing that will continue to improve your fundamentals?
Yeah. So, we've really, kind of like it's been, like kind of a three-phase approach for us in general, to keep that momentum going from an EBITDA perspective. And really it's, we're looking to, be adjusted EBITDA positive, in the very, very short term, looking to be EBITDA positive by end of year and then net income positive as we get into 2024. And I think, there's several different key strategies that we have in place, to grow operational efficiencies while again, positively impacting, our EBITDA. And one of those things, we're focused on, operating our cost structure and then just making sure that, the proper ROI for all of our endeavors are in line with what we're doing. And so, we're trying to strike that balance between, worker friendly and continuously looking for areas to improve. And so, we've got a great team in place and, I think we can leverage a lot of what our team is. But on top of that, it's really about just kind of setting the tone and putting in plans and KPIs and making sure that we're measuring them properly and have everybody all on the same page. I mean, it's pretty cliche, but, it's really about the people that we have and making sure that everybody's, congruent with what's going on and understands the goals and the objectives that we're looking to meet. And quite frankly, we've got some good leadership that we have on our team and it's kind of executing.
How many, what's your headcount sort of look like? How many sort of staff do you have?
Sure. So we've got about 90 people as of right now. So, obviously that depends on certain times of year and seasons, but yeah, we hover around right around 90 people.
Have you seen any, has there been any sort of like impact through like AI, able to bring further operational sort of efficiency, which would lead to lower headcount? Or have you kind of already gone through sort of some of that and you'll be in sort of growth or hiring mode? What's
No,
that sort of look like?
yeah, that's a good question. From an AI perspective, we've not done a ton. So a lot of what we do where we can, we'll obviously try to instill some automation, et cetera. But at this point, some things, I mean, we have semi-automated, things, but, obviously our kettles, they go through to a filler, like that's all connected and done. But as it relates to, I'd say, let's call it back of line, we've not done that yet. I think there's probably some opportunity for that, but, it kind of goes back to what's the ROI and does it make sense for us to do some of that? And at this stage, it actually doesn't, but, I could obviously as volume continues and throughput, increases, I could absolutely see some of that, coming down the line for sure.
Excellent. How's your cash position today? You guys have enough capital to execute on your business for the next 12 months, or will you have to look at the
Yeah.
market?
Yeah, that's a great question. So, we obviously we've been lucky enough as we've now started to turn the corner here as it relates to our bottom line. We've put ourselves in a pretty nice position to where At the moment, we're pretty good from a cash perspective for through 2024. Now, as some of the pipeline customers start coming through and we start to expand, obviously that could change pretty quickly because you could find ourselves in a spot where we may need some working capital because of the speed. So that's something we're kind of going through at the moment right now as a team, as a board, is walking through and talking through that because I think if we could grow quickly with the bottom line that we believe we can have, we'd like to try to do that. And that would open up the opportunity for us to potentially go out and get some more money.
You guys are currently listed on the CSE. I see that you're uplisting to the TSX Venture Exchange. What was the thinking sort of behind that?
Yeah, so the CSE has been fantastic to us. They were great group of people over there. Really brought us in 2 years ago. Happy with what they've done. But I think one of the things that as a business and as a company, we want to evolve and continue to evolve. And really, some of it is maybe a little bit of breadth of another wider audience as we kind of move into the TSXV. Coming from our trading days back in our finance days, we had worked with the TSX quite a bit in the early days, and so I think one of the things we have a high regard for the TSX, and really felt like it was an opportunity for us to kind of open up the doors maybe to some potential other investors that would be interested in hearing more about our story and understand what we're trying to do, seeing our bottom line and continuing to grow at the top, that they'd want to be a part of what we're doing.
Great. And what's your cap table kind of look like? How many shares do you have issued and outstanding?
Yeah, so we've got 52 million outstanding, and roughly 32% of that is just it's management. Quite frankly, management, employees, and directors. So one of the things is we are tightly held. We've got a lot of long-term investors that are really interested in what we're doing and really interested in that fresh, clean space, because they too believe, like we do, that that's what it's going to be as we continue to keep growing year in and year out. And so, but with that being said, we're obviously always looking for other people that are interested in being a part of us. And so, we look to have more and more people be, interested in our stock.
Excellent. For investors that might be interested in the company, why should they consider investing right now today?
Yeah. So, I think one of the things, and I kind of practice what we preach. I could tell you right now, I believe our stock is undervalued. We've put an NCIB in place, which we announced, even a month ago, and we did it a year ago, because look, we realize that our stock is pretty undervalued, and like there's no better place to invest than ourselves. And so, one of the things is that I think you get a great value right now because if you have followed us or haven't, but you can go look back, we continually have grown a top line at a pretty rapid pace. It's just getting up to speed now as we get into our bottom line. And I think as soon as we get to that and we start to show the bottom line profitability, as well as our growth from the top line with the space that we're in and in the amount of opportunity that is out there within the space, to me, I think it's just an absolute value buy right now. It's undervalued. Let's put it that way.
What's the market cap today?
Gosh, what is it? It's 40,
about 40 million.
Yeah, I think 40 million. Yep. So,
and if you were going to go and build this all from scratch today, with all those different lines, probably looking at something like that.
Yeah, for sure, and then some.
Well, that's good stuff. What's it like? Where you're located? Has it been a good place to sort of recruit and hire from? Is there sort of a good base of skilled sort of labor?
So we're lucky. I mean, the Chicagoland area is there's a ton of food, and funny enough, it's like food startup too. So not only does it just have a lot of food companies, big food Mondelez. I mean, there's big food companies processing, manufacturing out here, but there's also, it's like a food startup community within Chicago. So we get the best of both worlds in that we've got the entrepreneurship and the innovation side, that we get to meet and see all the time. But then you also have the multi-billion dollar companies. So from an employee perspective, we're really lucky because, we are a fresher breath air, quite frankly, from probably other companies. And so there is a talent pool within the Chicagoland area that is pretty nice. And so we've been lucky enough to be able to find, good people when we need them.
Well, that's good to hear. I know there's a big trade show that's important for snacking, the Sweet and Salty show that tends to be in Chicago. So it definitely seems that there's a great hub there. So it sounds like you're in the right place. Any other international markets, or are you pretty focused on the U.S. market itself for the time being?
We are focused probably mostly on the United States. However, we do have a few customers who have branched themselves into Canada, and we make a bunch of product for them that is now coming over the border to Canada, quite honestly. So some companies that are out there that are direct-to-consumer companies that are kind of moving into the space within Canada, we're starting to, I'd say, feed them with products so that their consumers in Canada can partake in it and partake in the products that we make.
And do you own any of your own brands? Do you have any of your own brands that so you truly are vertically integrated, right from sourcing, manufacturing, distribution, selling to the customer? Do you have any of your own brands that would be owned 100% by the Fresh Factory?
We do. We actually own a brand called Field and Farmer, which is a plant. It is plant-based food brand that we do salad dressings that we're national across the United States and Whole Foods, as well as we do dips, and then we do healthy bars, refrigerated bars. And then we also have another brand called Element Press, which is a cold pressed juice business that really, it really is the
and you use the high pressure process in that to extend shelf life.
Correct. Correct. That and in our dips as well. But that Element Press is throughout the Midwest region of all Whole Foods, and so that's kind of like a dedicated brand to Whole Foods.
Excellent. And what would be some of the 6 to 12 months sort of investor focused catalysts? Without giving away any specifics, we don't want to talk about any too much forward looking stuff. But what would be an example of some of the catalysts that we might be watching out for?
From our perspective, I think I would say, and I kind of go back to this is looking at our bottom line and really looking at our EBITDA. Again, we've had a goal to be adjusted EBITDA positive here soon, EBITDA positive by the end of the year, and then income by the end of next year, or in next year, not even the end of it. And I think that there's a highly likely opportunity for us to do that, as well as continue to look to see us as we continue to grow our top line too. It might not all come in the first quarter of next year as our top line because things tend to ramp up as we've got this pipeline that's very long. It takes time. So that's the one thing that's interesting as we've continued to grow, while we are very quick and nimble, as you get larger and larger and you deal with larger customers, and when you deal with fresh ingredients, it does take time because of the fact that you have to understand, what can happen from the fresh perspective.
Yeah. I know from retailer planograms and things like that, they work so far out. They're about as nimble as a cruise ship. So you gotta plan 6 to 9 months minimum, and upwards of a year out. So that's exactly right. So for a small business, it can sometimes be a bit challenging if you haven't done that proper planning. But sounds like you guys know that well. What's sort of a typical day look like for you?
Yeah. Interestingly enough, it's being able to talk to great people like yourself. It's funny, even today, I've talked to a few investors this morning, talked to yourself, talked to a few of the team members. I usually like to get into the office because of the fact that I will say we're low on space. There's really nowhere for me to go in our facility. So when we don't have customers there, I'd like to go in and really spend the day and see what's going on with our team and making sure that everything's kind of flowing properly. But a lot of days is really just kind of helping set the framework for the vision of what we're trying to accomplish. And it's, tactically talking to, investors, people like yourself, and really trying to get us over the hump as it relates to, setting the vision for profitability here moving forward.
Are you enjoying sort of being based in the U.S. and having a Canadian listed company from a capital markets perspective? Does that lend some challenges to it? Are you getting into the flow? Is that part of your affiliation with IR Labs?
Yeah, it is, and it's funny because we've been doing it for 2 years, and we've been public for 2 years. But quite honestly, while there are a lot of criteria that has to be met and reporting that has to be done, that's definitely a lot different than a lot of the private companies clearly that we've built. We've really kind of just kept our heads down through this whole time and really have just focused on ourselves internally and worried about, look, the stock's going to take care of itself because all we're going to do is come out and produce numbers that it's going to be good. And so at some point, as we kind of get the word out there and with the help of IR Labs and Alyssa and her team, with getting them out there and helping kind of hit the pavement, so to speak, people will start to hear us and people will start to see us. Because I think you mentioned it, unfortunately, I think there's a lot of people in our sector that have not maybe had the success that we've had. And again, we're different. I mean, we're a different company. We're different in the sense, like, I think maybe different than what maybe most Canadian investors have seen before, because we are a true company, true assets, truly, it's not just an idea. Like, I mean, we're not trading on an idea. No, we are legitimate, a company growing a business sustainably that we want to be here for a long time. I'm not going anywhere. My partners aren't going anywhere. We're looking to grow this thing, to be very big. And so we're not looking to kind of get in and get out. So maybe a little bit different than some of the other businesses that are compared to us. And so for us and for me personally, really, it's just been about keeping our heads down and continue to just kind of prove ourselves, so to speak, to the market. And we do that by showing EBITDA, positivity here, hopefully soon, as well as, our revenue growth.
Hey, well, I think that's pretty good. We'll wrap up from there. Bill, thank you very much for your time. I really appreciate it. Continued good success with the Fresh Factory, and we'd love to have you back here in subsequent quarters when you've got some other new initiatives to update us on.
I'd love to come back, and thank you so much for having me. Really appreciate the time to talk with you.